Ladies and gentlemen, welcome to The Plain Bagel. I'm your host, Richard Coffin. Home is where the heart is, as the saying goes, but based on some claims circulating across articles online and X threads, it's increasingly looking like home is where Larry Fink is. You see, there's been an alarming trend of large investment firms buying up single-family properties across the United States. Not apartment buildings or condo buildings like you might expect, but actual houses. With CoreLogic, a real estate analytics company, estimating that investors have been buying up a quarter of all single-family properties across the country. And these large investment firms have clear advantages over the first-time home buyers. Not only can they purchase multiple properties and at times pay for it in full cash, but they also are allegedly paying 20 to 50% above asking at times to outbid the competition. And not only do many now blame these companies for skyrocketing home prices and rising rents, but some are now warning that based on the current trajectory, America is headed toward becoming a dystopian renter's nation, where the majority of single-family homes are corporate owned. And at the center of all this, allegedly, you have none other than BlackRock, Vanguard, and State Street, who else would you expect? With presidential hopeful RFK Jr. going so far as to claim that these three asset managers, which are some of the largest in the world, could own 60% of single-family homes by 2030. So are investment companies muscling out home buyers and purchasing up single-family properties across the United States? Well, sort of, actually, but there are some pretty big buts with all that. You see, it is true that since gobbling up a bunch of foreclosed homes following the 2008 financial crisis, that investment companies have had increased activity in the area of purchasing single-family properties with the intent of renting them out and earning a return for their investors. And I think this does warrant some criticism, concern, and even possibly political action, given the housing affordability crisis faced by many Americans. But a lot of people have taken these real, more nuanced issues about investor involvement with single-family properties and really blown it out of proportion to a ridiculous level, to the point where people are not only misinterpreting stats, but they're not even blaming the right companies that are involved with all this. For example, the claim that BlackRock is going around paying 50% above asking to buy up whole communities appears to be a misinterpretation of this article, which is about Fundrise, a different company, buying up a built-for-rent community. And the 50% is the builder's gross margin, not how much was paid above asking. So in today's video, I wanted to clear up the situation and add that nuance that's often missing from online discussions to explain why this is a real issue that deserves attention and should be watched moving forward, but why the narrative of Larry Fink is buying all the houses is just a real misrepresentation of what's happening and even the players and problems involved here. Now, before jumping into it, I will highlight that I'll be focusing on single-family residences as opposed to the larger real estate segment as a whole, given that this is the more controversial area of investor involvement. And I also highly recommend you watch my other video on BlackRock, Vanguard, and State Street, allegedly controlling the S&P 500 and every company from the military to the media, because A, BlackRock paid me a lot of good money to spread their propaganda, so please do check it out. But also, B, it will give a lot of good context for the discussion we'll have here. And we'll start by clearing up the situation around BlackRock, because before even really getting into the arguments, a lot of people get confused about, again, who's even really involved. And if you aren't familiar, BlackRock is the largest asset manager in the United States, managing roughly $10 trillion of client money, and there's already a lot of conspiracy theories around BlackRock. So because of that, I guess people just threw in that they are also the ones buying up all the single-family properties. But the thing is, that's not BlackRock. There's another company called Blackstone, which I'm guessing is what people are thinking about. You see, BlackRock is primarily involved with publicly traded stocks and index funds. And the $120 billion of US residential assets they do have primarily involves mortgages, multifamily properties, and yes, the construction of single-family rentals, but not the purchase of existing single-family properties, since that construction is primarily on those built-for-rent communities that can be managed similar to an apartment building. Blackstone, on the other hand, is a private equity company that deals primarily in alternative assets that does have a reputation for going around and buying up single-family residences. And to be fair, the reason these companies have such confusing names is because they used to be connected back in the 1980s, but they were separated just a few years after their creation and have had separate operations in different arenas of investing ever since. So that's the first thing. A lot of people seem to be making this really basic mistake when trying to reference who's actually doing this activity. The second thing to highlight is that Blackstone isn't even one of the top 5 players in terms of single-family home ownership. Based on the numbers I was able to find online, the top 5 owners of single-family homes are Progress Homes, which is owned by private equity company Pretium at roughly 90,000 properties, Invitation Homes, which is a publicly traded stock with 83,000 properties, American Homes for Rent, another publicly traded stock with 60,000 single-family properties, First Key Homes, which has over 50,000 properties, and Amherst Group, which owns around 40,000. Meanwhile, Blackstone itself only owns around 25,000 properties. They used to own Invitation Homes, which is currently one of the top 5, but they sold the remaining stake of that company back in 2019. Now, Blackstone has made investments in other companies that also buy single-family residences, and this could be where people are mixing in BlackRock, Vanguard, and State Street, given that they tend to hold shares in most publicly traded stocks, so they naturally have investments in some of the top 5 players, and their share is actually larger than what you typically see. But even that would be a bit of a stretch because you're blaming a firm that has a minority stake in an operation rather than blaming the actual operation that's going around and buying single-family properties. And even if you did the rough estimation of taking their percentage ownership of these top 5 players and multiplying it by the number of homes owned for a rough breakdown, I guess, of how many properties are owned by BlackRock, Vanguard, and State Street, even though that doesn't really make any sense, they still wouldn't crack the top 5 list. So not only do a lot of people seem to be mixing up BlackRock and Blackstone, but a lot of people aren't even bringing up the company with seemingly the biggest operation in the space, which is Pretium Partners, a separate private equity company from Blackstone. But at least now we're talking about the right companies here. So how many single-family residences have been taken over by these firms? Well, based on the roughly 100 million single-family homes across the United States, 0.3%. In fact, according to the Private Equity Stakeholder Project, it's estimated that as of 2021, all institutional investors own just 350,000 properties across the country, or roughly 0.36%. While another more aggressive estimate by MetLife puts that figure at 700,000, or 0.72%. Now, just because these companies don't yet have a large market share doesn't mean that they aren't still contributing to rising home prices with their current buying activity. And again, CoreLogic, a real estate analytics company, has estimated that investors have purchased roughly a quarter of single-family properties over the last few years. And this is a stat that you see thrown around quite a bit when people talk about Wall Street buying up all the single-family residences. But the important thing to note here is that while the term investor might make you think about faceless giant Wall Street firms, roughly half of this buying activity comes from mom and pop operations, entities and individuals who own between 3 and 9 properties. Mega corporations or investors with over 1,000 properties, while higher a year ago, only accounted for around 9% of this investor activity earlier this year, or roughly 2% of total buying activity. Now, importantly, this is all at the national level. And the one caveat to what we've talked about so far is that there are pockets throughout the United States where corporate buying activity is more significant and more likely to be having an influence on property prices and rents in the region. For example, a lot of investment firms seem to prefer buying properties along what's called the Sun Belt, or the southern part of the United States. And last year, Florida, Georgia, Nevada, and Arizona saw mega investors buying over 5% of the single-family properties sold, with Arizona nearly seeing 10% go to those companies. And what is concerning with this increased activity is these are also the states with some of the largest year-over-year increases in home prices, with values rising between 22 and 32% across those 4 states. Rents have likewise increased in these areas, with the rent for a 2-bedroom detached home rising 43% in Phoenix, 44% in Tampa, and 35% in Atlanta, compared to just 24% nationwide from January 2020 to early 2023. So here, I think it is fair to have the nuanced position that higher corporate investment activity in these regions could be contributing to rising home prices. But even with that, you can't place the blame for skyrocketing home prices squarely on the shoulders of mega corporations, especially considering that states like South Dakota likewise saw a 23% jump in home prices despite not really seeing any buying activity from mega corporations. And that's really my point with this video. It's not to defend these large Wall Street companies. It might surprise you, but I would rather see single-family properties going to first-time home buyers. But clearly, there are other factors at play here that are influencing rents and home prices, with one of the biggest ones being that supply simply isn't keeping up with demand. We've only just recently seen home starts recover from their post-financial crisis slump, and the types of homes that are being built aren't as accessible as they used to be. Only 7% of homes being built in 2019 were starter homes compared to 40% in the 1980s. And then there's the influence of low interest rates, which played a massive role in spurring real estate demand, especially over the pandemic. And again, I do actually think these corporations have contributed to problems in select regions. While these companies have argued that they're benefiting supply with the construction of built-for-rent properties, obviously allocating builders to built-for-rent communities likely means taking resources away from built-to-own properties. And while it's hard to substantiate, there are claims that these companies will buy properties in neighborhoods that they already mostly own and really aggressively bid up the price to, on the books, increase the value of the other properties they have. Again, I haven't seen much proof of that, but it wouldn't surprise me if we've seen that in some regions. But even if you were to take all the private equity and Wall Street players out of the market, while there might be some marginal benefit, especially in those pocket regions, you'd still only be eliminating less than 10% of that investor demand, and likely wouldn't be solving the housing affordability problem. But Richard, you might say, what about RFK Jr.'s claim that these three companies, BlackRock, Vanguard, and State Street, are on track to own 60% of homes by 2030? Well, to be honest, I don't know. I have no idea where he got that stat from. I did find one estimate from MetLife that claims that by 2030, institutional investors could own 40% of all single-family rentals, but single-family rentals are only roughly 14 million of the estimated 100 million of single-family properties in the US. So even in 2030, if you kept those proportions the same, that 40% would still only represent 5.6% of all single-family homes in the United States. And yes, there is of course the risk of that proportion increasing over time, but I don't know how to reconcile the claim that three companies that currently don't buy single-family properties are going to own 60% of all homes versus this forecast that all institutional investors will own 40% of all rental homes. They're two very different claims. So hopefully that clears up some of the misinformation out there and puts things into context. Yes, there are investor-backed companies, some from Wall Street, who are going around and buying up single-family properties. And that could present an acute problem, especially in those pocket regions where they have higher activity, and we've seen issues with housing affordability. But the claim that BlackRock, Vanguard, and State Street, or even Wall Street companies who are actually buying up single-family properties, are buying up everything on the market and causing the housing affordability crisis is just clearly too simple. Even though it's very easy to blame a massive, faceless Wall Street institution for bidding up prices across the nation, the truth is that the bulk of this buying activity is more likely to come from individuals and local companies, which, to be clear, is ideal, but obviously makes blaming investors as a whole a lot trickier for politicians. And if you want to champion causes like this, you need to get your information right and the names of who you're going after. Anyway, that's the video. Thank you for joining me today. Larry, think if you're watching this, you can leave the check in my PO box. But otherwise, if you like this video and found it helpful, please do make sure to like, subscribe, all that good stuff. It does help the channel tremendously. And let me know your thoughts in the comments down below, even if you disagree with everything I've just stated. As mentioned, I think there's room for smart policies to protect home buyers here. But very clearly, the situation is very different from what you see painted online. But even if you disagree with me, happy to hear from you in the comments down below. Anyway, thanks for watching. And as always, be safe out there.